Welcome back. Before we take a look at the day's business news, let's take a look at the stock indices across the GCC. And in our top business story, construction projects worth $69.91 billion were completed in the GCC in 2013. That's according to a new study released on Sunday. The research, conducted by Ventures ME and commissioned by DMG Events, also estimated that 2014 would see a 17.4% rise in completed projects at $83.41 billion, and $82.2 billion worth of projects will be awarded during the year, with the segments of residential at 43.3%, commercial at 18.2%, and educational at 10% leading the way. The report said 2013 was a positive year for the region's construction market. Saudi Arabia and the UAE ranked in the top two positions for all sectors, with the exception of education and healthcare, in which Qatar ranked top with completed projects worth $4.6 billion in the educational segment and $1.12 billion in the healthcare segment. The report also said the value of the GCC interior contracting and fit-out market grew by 8% last year and was worth $7.81 billion. Saudi Arabia was the largest market with a 47.4% share, followed by the UAE and Qatar. According to the Ventures ME study, figures for 2014 are expected to increase further for both the building construction and interiors market. It said healthcare sector is expected to grow by 250% from a value of $2.4 billion registered in 2013 to an estimated value of $8.4 billion. Nakheel has reported a 27% increase in 2013 profit to 2.57 billion dirhams, helped by a 20% rise in revenue to 9.4 billion dirhams. The company, known internationally for building the Palm Islands, seems to have recovered fully from the effects of the global economic crisis. Ali Rashid Lutha, Nakheel's chairman, was quoted as saying that the company is committed to announcing more projects and this year will launch 6 to 8 billion dirhams worth of projects, including multiple hotels, which will now be a major focus area. In terms of projects delivered, mid-year will see the handover of Palm Residences, which is the first project that it announced post-crisis. The Dragon Mart Phase 2 is another heading completion, while a hotel in Dera is set to be ready before year-end. According to the company, by 2016, its hotel portfolio should rise to 9. US equity markets continue to post gains amidst a mixed start to the fourth quarter earnings season, while financial heavyweights Bank of America and JP Morgan Chase announcing better than expected profits during Q4. Software giant Intel announced weaker than expected revenues. The mixed earnings reports, along with an improving weekly jobless claims figure, saw US equity markets close just under their record highs. Gold, too, benefited from the improved risk sentiment, closing the week at above 1,250, posting its fifth consecutive week of gains. To talk more about this and the week ahead, we earlier spoke to Gaurav Kashyap, the head of futures at Al Pari Middle East.
Well, we've seen markets kickstart the week in a rather range-bound pattern. Of note, we had the release from China. The fourth quarter year-on-year GDP reading impressed. It came in at 9.7%, above expectations of 9.6%. And although we saw a slightly weaker industrial production figure from China, markets took the news with a rather positive bias. And as a result, we've seen the Australian dollar start the week on the front foot against the US dollar. Overall, it is a light week on the economic calendar. We do have the weekly initial jobless claims from the US as well as existing home sales coming out towards the later part of the week. We will continue to watch the US earnings season. We are entering into the second week of earnings reports. Last week we had a bit of a mixed release. We had several banks such as JP Morgan Chase and Bank of America topping estimates on the profit side, whereas Intel disappointed on the profit side. So we'll continue to watch how the earnings come out this week. Once again, we're seeing higher US equity markets, so we're going to have to see stronger than expected earnings and profit reports to continue seeing these gains in the US equity markets. So overall, we're going to be a little bit cautious with regards to further gains in the US equity markets, and risk sentiments might remain slightly on the lower side in the week ahead. Moving over to Europe, we have a host of PMI figures coming out. This should continue to bring volatility in the euro. The euro has been trading in a bit of a sideward range against the US dollar between 135 and 138. And also what we will be looking at will be gold in the week ahead. Gold has had a nice little run in the past few weeks, surprising a lot of analysts. And it is seeming to find a bit of stiff resistance at 1260 levels. So we expect it to find a good test of these levels, and a break above 1260 will expose probably 1280.